Hi there, this is Christopher Ruspe. I'm a comprehensive financial planner with Applied Financial Wisdom. We've been talking recently in our video series about the basic building blocks to achieve financial independence. Today we're going to be talking about building block number 4, which is to create a tax-efficient investment plan. But first, let me go back for a minute here. Step number 1 was to create a rainy day fund. Step number 2 was to reduce or eliminate your debt. And step number 3 was to create a budget and to follow a budget. Now, if you're looking for those video series, just subscribe or hit me up on my website at appliedfinancialwisdom.com and we'll make sure you get access to them. But the idea is that once you've created a budget, the budget will hopefully help you cut costs and learn to live within your own means, and then you'll start to have a surplus. And when you start kicking off a surplus, what most people do is they just stick it in the bank because they don't know what else to do with it. And that's what I see all the time with people who come in here. Large amounts of cash because they're frugal, they're paying themselves first, they have a good budget, they've reduced their debt, and they just don't know what to do with it. What we want you to do is cash, number 1, is lagging inflation, and also cash is not tax friendly. So what we want you to do is to create a basic investment plan and to keep it very simple when you're getting started and take advantage of the tax loopholes that are available to you. The biggest tax loophole that's available to you is your retirement plan at work. If you work for the federal government, that's called a TSP. If you work for a for-profit business, it's usually called a 401k. There's other numbers that could be assigned to it, but basically it's your employer retirement plan. That's your biggest tool for saving money for retirement because you can put the money in there before tax. You can put it in before it ever hits your paycheck, so you don't even get used to spending it. And also, most employers do offer some sort of match. So that's a nice feature as well. So that's building block number 4. Tool number 1, okay? Tool number 1 is to use your employer retirement plan. A second tool might be to have a Roth or an IRA. You could have those individually and outside of your employer plan. The other common building block that we see here when someone's just starting out is to start putting some money away if their kids want to go to college, or if they have kids and they want to go to college. So those are common building blocks. I recommend that you only use diversified products. Don't try to play around with one individual stock at a time because it won't work. When you work with diversified products, you're working with mutual funds or commonly ETFs. There are other types of diversified products to use, but those are some of the more common ones. I'm not going to give you individual advice because that's not the role of this video series. But until you have about $50,000, I think you could probably get away with doing it yourself. And of course, if you want help, you can certainly pay for help with smaller sums than that. So this will conclude our conversation about financial building block number 4, which is a basic investment plan. Make sure to utilize things that are tax friendly because your biggest cost in life is always going to be taxes, and you want to manage those aggressively whenever you can. We'll be continuing our series tomorrow or the next day with additional financial building blocks. Make sure you subscribe or follow me on my website at appliedfinancialwisdom.com so you don't miss any of our future content. And thank you very much for watching. And we ask you, we're trying to help 100,000 people here. So if you wouldn't mind giving us a like and forwarding this on, sharing it to somebody who you think might benefit, I'd appreciate it. Thanks. Have a good day.